Hey, it's Elliot and welcome back to a new video. So today I'm going to FaceTime my personal broker, which I have been using for years. And just before doing so, I went on my Instagram and I asked everyone what question would they like to ask to a professional broker. So in this video, in this FaceTime call, I am going to ask my personal broker all these questions in a very transparent manner, whether it is manipulation about markets, and basically all the gray areas people are asking themselves about the brokerage industry. So let's dive into this video. Hey Ren, so how are you? First of all, a big thank you for coming on the call. We quickly talked, and so today you're going to answer many different questions I received and so many different retail traders asked themselves. And yeah, a big thank you, because I generally think that the broker side of trading of that industry is sort of a gray area, and generally brokers do not want the other side, so traders, to generally know many things. So a big thank you for your transparency and for sharing everything you're going to share today.
No worries at all. I think this is very important in this day and age. I think the traders should have as much access and transparency when dealing with brokers as possible. So I'm always happy to do this type of thing. So thank you for doing this with me.
Cool, thank you, man. Well, first of all, to start, maybe can you tell us quickly a bit about your past, your career as a broker, and yeah, what you basically do on a day-to-day basis?
Absolutely. So I've been in the industry now for about 11 years. I started here in Sydney when I was 23 years old, working for a firm here in Australia, which I worked for about 7 years. So I basically learned everything at that particular firm. Learned how to trade, learned how the markets worked, learned how brokers work, and was pretty fascinated by it all. And then moved to Blueberry Markets about just a bit over 3 years ago now, which was actually started by one of my good colleagues and friends, Dean. He wanted to set up a brokerage that we would want to trade with ourselves, basically. So just something that really focused on customer service and wanted to change the perception of how Forex brokers are looked at in the industry and how the Forex markets in themselves are looked at. So he set up Blueberry Markets, and I think we've sort of set out to do that and been pretty successful so far, especially when it comes to the customer service side of things. So in a nutshell, my day-to-day is just dealing with clients, dealing with partners like yourself, just making sure that everyone's happy, basically.
I see. Well, first of all, for anyone asking themselves why we are doing the video together, it's personally because Blueberry Market is a broker I personally use. It's a broker I personally trust and that I generally recommend. Yeah, just because I know how you work, I know how you do things, and I've always been very happy with the service. So yeah. Okay, so I think we're going to start with the questions that I've picked. So that's the most common question that came through Instagram. There has been literally thousands of questions, but there's always a few ones that just come out quite often. So the first one that came up is it better to have an ECN account or a standard account with your broker?
Sure. So obviously we have the two different account types, the Pro ECN style and then the standard account. The differences between the two, the standard account has our spreads, or say for example the spreads we get from our liquidity providers with a small markup on them. So that's sort of how we generate revenue from the standard accounts is mainly in the spread. And then the Pro ECN style account has the raw spread that we receive from our liquidity providers with no markup and then a commission on top. So the Pro account, you need a little bit of a larger deposit size. It's $2,000 is the minimum, whereas the standard is $100. So if you're new to trading, I would probably suggest starting off with the standard accounts, just to dip your toes in and get familiar with it. Personally, for myself, I prefer the ECN style account, just because I can see the cost of trade much more clearly when I enter the trade. It's a fixed amount, and I know that as soon as I'm in profit, I've paid off that commission. But it really comes down to preference and whatever you prefer. But if I'm being quite honest, the Pro account works out slightly cheaper in terms of your cost of trade.
Okay, thank you for your opinion and how you personally use it. Then another question that came quite often is, do you sell the market orders to professional institutions in order for them to hunt stop losses of your clients?
No, the simple answer is no. There's no real benefits. We deal with 5 or 6 different liquidity providers, and our trades are passed through to them, but there's no selling of data. There's so many different traders. We've got thousands of active traders, and they're all in different directions. I don't think there would really be any benefit of selling that information off to the institutional banks. I think the institutions themselves have enough knowledge about what's going on. I don't think there would be any benefit of us selling our traders' information to the banks.
I see. And for anyone looking, could you quickly explain what is your liquidity providers? What do they do? How does it work?
Yeah, sure. So we have, say, 5 or 6 different price providers at any given time, and they can chop and change depending on how the market depth is and our relationship with those liquidity providers. But basically, we deal with those 5 or 6 banks, and they provide an aggregated price through to our trading platform. So say if we've got one price from Morgan Stanley and another price from Deutsche Bank, we might take the bid from there, the ask from there, and that's how you get your spreads. And that's how you can get them as tight as possible as well. So we deal directly with those pricing providers. They give us a price that comes straight through to the trading platform with no intervention on our side. Whatever those prices are that they have setting through are passed straight through to the MT4 trading platform, and it's the best aggregated price of whoever we're using at the time.
So now, sort of linked to that previous question, someone asked, do you place the trades directly straight into the market, or do you actually hedge against your clients?
So that's a great question, and that's a question that you should always be asking your broker. So the simple answer is it's varied. So it depends on trade size, it depends on volume, it depends on the currency pair. We have a risk department that determines whether we'll be the counterparty to the trade or whether the liquidity providers is the counterparty. And to touch on this, I think this is one of the biggest misconceptions when it comes to Forex brokers. While we can be the counterparty to some trades, there's always someone on the other side of your trade, no matter where you're trading. It's just the simple matter of Forex trading, or any type of trading for that matter. The big important thing to note is we have no intervention over what prices we receive. We don't run a dealing desk. So whether we're the counterparty or not doesn't really affect the trader. The important thing is that those prices are directly received from our liquidity providers with zero intervention, and it's whether we take on the counterparty risk or the liquidity provider takes on the counterparty risk is exactly the same to the trader. So there's no conflict of interest, which I think is what traders want to know. That type of thing still does go on this day and age. I think there's some unregulated brokers out there that you never know what they can be doing on their back ends. The ones who offer up to 1 to 2,000 leverage and no deposit bonuses. These things are typically sort of red flags to stay away from, because they can sort of offer those type of things because they just want to get clients in trading and losing their accounts. Whereas with us, the goal is to have as many active traders as possible. If every single client was to lose their funds, we'd have no clients, and then we would go belly up. I think a good way to look at it is if you're short 1 lot euro, then there's a good chance that another client is going to be long 1 lot euro. So we've got so many active traders that they tend to hedge off against each other. So if we are the counterparty to those trades, we will sometimes make revenue just from the difference in those prices. If one trader closed out here, another trader closed out there, we might make benefit from that. But a lot of the time, the revenue is from the spread and it's going through to liquidity providers. But again, conflict of interest there's no conflict of interest if you're not running a dealing desk. That's how a lot of brokers operate. And again, ask your broker these questions. Jump onto their live chat or call them up and check and ask how they do their pricing.
So you think whenever someone is actually looking to sign up with a broker, they should call them and ask if they are dealing with the dealing desk or how they are working on the back end?
Yeah, and if they're hesitant to answer any of these questions, then I think that gives you the answer in itself. They should be able to answer these questions with no issues.
So someone also asked that it was one of their dreams to become a broker, so actually to work as a broker. So how do you become a broker in terms of studies, or how do you get into that industry?
Okay, great question. So I'll be completely candid and honest. I was quite lucky to fall into this. I was working selling boutique wine when I was about 18 years old, and happened to meet someone there who was in Forex and sort of showed me the ropes. And I haven't studied finance. I've only done internal courses when I'm working here at Blueberry or my old firm. But if you wanted to get a leg up and really get into this industry, a finance degree would definitely be a big help. Having knowledge of the Forex markets and how it works would definitely be a big help if you wanted to work for a brokerage. And it is a very fun and exciting job at the end of the day. It's something different every day. But it really comes down to your Forex knowledge. And if you want to work for a good broker, you're going to really have to be very passionate and show a lot of initiative and motivation. But I would say send your CV around and just ask questions, and there'll be someone there to be able to help.
Okay, cool. And a question that also came in a way similar is people asking, is opening your own brokerage firm something possible, doable? And if yes, what does it really take in a nutshell?
Yeah, definitely. I think it really depends on where you are in the world. So here in Australia, we're actually still licensed by another broker down in Melbourne, ACAP, who we're licensed through, because in Australia, you can't just set up a firm and get your own financial license. It's very difficult, and it takes a long time. There are places in the world where it is a little bit easier to set up a brokerage firm, but that's just in terms of the licensing. I think you would need to have a real great understanding of how the Forex markets work, and you would already want to have a good client base of people who are basically willing and ready to sign up, so that you can start earning revenue right off the bat. But there's lots of things to consider, like if you're going to use MT4, you need to get MetaQuote's licensing, you need to have a platform branded, you need to have responsible managers on board, you need to have a compliance department. So there's a lot to consider and a lot to take on board, but that's not to say it's not possible. It is a very saturated market at the moment. There's a lot of brokers around there, but there's still a lot of room, I think, for new brokers to come up and compete in the space.
So actually jumping back on the previous question, which was how to set up your broker, you said that location is a big matter, and that's for licensing, but also it could be regulations. So I know that personally, I always trust brokers which are FCA regulated, as I used to work with a fund in London that used to be FCA regulated, and that used to be a big pain. So I know how they work. The ASIC as well, I know is very tough. What do you have to say about regulation on the broker space? Is it really important? Should people really go with regulated brokers, or which different regulations would you not trust, or I don't know?
Yeah, that's a really good question too. So when I first started in the industry, 11 years ago or so, regulation wasn't really a big topic. It was mainly about spreads. That's what everyone was competing on. The best broker was the one with the tightest spreads. And then regulation really became important when the regulatory bodies were sort of starting to clamp down. So ASIC and the FCA and the MAS in Singapore are always very good regulatory bodies. If you were to have an account with a brokerage there, you would feel pretty safe. There's a lot of the sort of tier 2 and tier 3 countries now who've stepped up to the plate, like Cyprus and Vanuatu, where if you see regulation there, then it's much better than it was 5 or 10 years ago. So regulation still is definitely important, but there are a lot of countries that are now offering better regulation than years ago. I would just steer clear of brokers that have no regulation whatsoever, or are only regulated in a tax haven somewhere, the Seychelles or St. Vincent's and the Grenadines. If that's their only regulation, then it's not to say that you have to steer clear of them, but again, just do your research, because the regulations are different there. But now I think the most important thing this day and age, and what brokers are really competing on now, is reputation, online reputation, because that's coming out of traders' mouths. That's coming out of other traders' mouths, writing about brokers and their experiences with them. So a lot of that info is usually going to be your most valuable info when it comes to a broker. They can be regulated, but they might have 100 really negative reviews of people who've just been messed around. So it comes down to regulation, very important, reputation more so important, and asking your broker these questions.
Okay, yeah, makes total sense. I think that the online presence is something that actually applies to anything on the FX industry, whether it is education, whether it is services, whether it is brokerage, because we live in a day and age where literally anyone can say anything online. And some people may be scared that you get one bad review. However, when you have a bunch of clients, usually that comes down and sums up to the real idea, what people really think about the service.
Yeah. Couldn't have said it better myself. I couldn't have said it better. We get negative reviews. I have no issues with negative reviews as long as they're the truth. If people go in and post negative reviews that are false, then I tends to upset me a little bit. But if there's negative reviews that are the truth, that's completely fine, and then it's my job to try and change that client's perception and try and turn that negative into a positive. So we welcome negative reviews. We welcome positive reviews, of course. But I think we live in a very lucky time where we have this information readily available, like you said, for anything in the Forex industry.
Now, a question that also came very often is, can you, as a broker, manipulate the chart? Can you increase the spread at your own will, basically? And depending why would you want to do this, but can you actually do it? Can you manipulate the chart?
Yeah, this is again. This is. I think we touched on this a little bit before, but this is the number one question you should be asking your broker. This is where you want to be getting the most info about, and if there's any hesitation, then you should run for the hills. So, as I said before, say for example for our standard accounts, we have a markup on those spreads, but that's a set markup that can't be changed on our ends. Well, it can be changed, but it's not changed live. That's a setting that we have on our spreads. So the spreads that we get coming through to our MT4 platform are direct from our liquidity providers with no intervention from us apart from that small markup. That markup stays the same unless we change it. So essentially, when you see spread blowouts to 40 pips or whatnot, that's directly from the liquidity providers. That's the price that they're offering at the time. That's the best possible price that we can show on our trading platform. This is something that you should be wary of and be knowledgeable about. So if there are news announcements coming up, you need to know about that, and you should understand what might happen to those spreads when you're trading over those type of times. But the simple answer is no. We don't have the ability to manipulate the spreads we get from our liquidity providers. We don't run a dealing desk. It's not a market-made price. Those prices we get are straight from our liquidity providers with no intervention.
So on the broker end, brokers make money from the spreads and commission, correct?
Yes, that's correct. Or they can, as I said before, they can have counterparty risk. So it is possible for us to make money when a trader loses, and it's vice versa. We will pay out money when a trader wins. But it comes down to the fact that those prices are the same no matter what. We don't have the ability to change those prices. There's always someone on the other side of your trade no matter what. And at the end of the day, we just want people actively trading. It's not as simple as everyone losing. Winning traders are happy traders at the end of the day, and I like dealing with happy clients. So it's good to have winning traders.
So as a regulated broker that has no dealing desk, having profitable clients, profitable traders on board, or losing traders, losing clients on board is the absolutely same. There's no better. Maybe even a profitable trader would be better because he would tend to be happier.
Exactly right, and you'll see that that's the way it will be for basically any regulated broker here in Australia. They'll be operating the same pricing model. It's beneficial just to have active traders and people trading all around the clock.
Now, one question that I thought would be very interesting is, if you have that information, what's the average account size of profitable traders that you have as clients? I'm sure there's many different,
Yeah, that's a good question. I don't know if there would be an average account size, because I've seen people with a few $100 turn their account into $10,000 accounts, and then someone start with $100,000 and multiply their account many times. So I think it more so comes down to the trader themselves. But as an average, I would probably say anyone starting off with a 5 to 10,000. That's probably been the most common figure I've seen be able to increase and become profitable. Because obviously, starting with a lower amounts, you have to start smaller, with much smaller sizes to build up your account. Whereas $5 to $10,000, you can trade larger lots and sort of build that account up a bit faster.
Because one thing I see a lot in the FX industry is many people, obviously, sometimes working with brokers and wanting people to open these very tiny small accounts of $50, $100, saying that they will be able to turn this into something very important, which for sure anything is possible. However, I do generally say that from minimum 1,000, 2,000, that's when you can start, let's say, being able to play also with your risk, not being limited by position sizing either. So yeah, you would agree with that.
Yeah, 100%. I mean, if you've got $100 or $200 in your account, it's going to take you a lot longer to get to 50,000 than if you were starting with 10,000. So yeah, definitely see what you're getting at there. It just comes down to your trading strategy and your risk parameters.
And so then, touching on this, what would you say differentiates losing traders from winning traders on your back end, from what you can see with the positions? What really makes that difference from winning traders and losing traders?
That's an awesome question. I would say from the conversations I have with these people, it mainly comes down to the psychology side of things. I think I see a lot of losing traders go on tilt or try and chase their losses, stray from their strategy, which is a big one. Sort of as soon as they have a couple of losing trades, they try and chase those losses and try and recover. Whereas the profitable traders that I've seen in my 11 years here, every single one of them sticks to their strategy and has phenomenal discipline. They never waver. They don't let losing trades affect them, and they treat it like a business. They really put in the hard yards and really put in the work. But yeah, I think it comes down to discipline and the psychology side of things, not letting losing trades knock you off your perch.
Now, a question that also came quite often is, do brokers actually trade with profitable clients, or do they copy the trades of profitable clients? Can they do this?
Yeah, I have seen that in the past for a broker that I worked with in the past. It's definitely possible to do. It's not something that I've seen done here, and there's not a massive benefit to it. I guess it's still taking risk on a client's trades, I guess. But it is possible to do. I don't really think there's anything wrong with it, so to speak, but it's not something that's done here.
Now, someone asked, how do they take the positions on margin accounts? So the dollar that the client is borrowing, where does that money come from, basically?
So it's essentially coming from your broker, so to speak. So we have margin requirements with our liquidity providers that we would post to them and hold trades with them. So we might get 1 to 100 with them, but then we outlay a little bit more to be able to give our clients, say, 1 to 500. So that all comes from the brokerage side and the funds that they outlay to their liquidity providers to be able to offer those smaller contracts that institutional banks don't take on, like micro lots and whatnot. Yes, that's all comes from the broker side.
Okay, so the money borrowed actually comes from the broker. He is the one offering that service.
Yeah, exactly.
All right, makes sense. Now, someone here asked, can a broker give you $50 million if you actually made $50 million on your account? Can you actually withdraw that money?
I think this is it scares me how often I get asked this kind of question. The fact that people have to ask this question. Those funds in your trading account are yours. If you make $50 million profit, that's yours to withdraw. There's no issues there. Any broker that can't be paying you out your profits, you shouldn't be trading with at the end of the day. So yeah, unfortunately it's a silly question, but it's unfortunately one that has to be asked because there's so many poor brokers out that don't pay out profits. But again, trade with a regulated broker, trade with a reputable broker, and that's not something you'll ever have to worry about.
Now, when a broker goes out of business or goes bankrupt, do the traders get their money in their accounts back, or is the money just lost?
Again, that depends on where your broker's regulated. So here in Australia, obviously we're regulated by ASIC, which also follows the Australian client money laws. So that means that all the client funds are held separate from company funds, from day-to-day operations and from salaries and so on, and company losses. So if anything was to happen to a broker here in Australia, all the funds are kept separate and the trader will get their funds back. Worst case scenario, maybe you might get back 95 cents on the dollar, and it might take some time. Obviously, it's not just going to be a quick process where you get your funds back. I think there's risks holding your funds in any financial institution, no matter what they are in the world. But yeah, if you're trading, yeah, exactly. But if you're trading with a regulated broker, then they'll be following certain guidelines of that regulation. But again, just do your research and ask your questions on that, and you'll sort of get an idea of how safe your funds are.
Now, I got many questions about B-book and A-book, which comes up very often. Would you have something to say about this myth about B-book, A-book, and what do they actually mean for those people that don't know?
Yeah, well, I think we touched on this a little bit before, and that's not the terminology that we use. Where either the counterparty or not the counterparty, or liquidity providers are the counterparty. In my experience, from what I've learned about A-book, that's typically following profitable traders, like what we touched on before, and then B-book would be taking the risk on those trades. So it's what a lot of brokers run. We sort of run the counterparty risk, or the trades going through to our liquidity providers. So we're not following profitable traders, as we discussed, but we can profit if a client loses at times, and we would also pay out if a client wins at times. But again, we've got so many active traders that it typically nets off against each other. And one of the other misconceptions that I tend to hear is that 95% of traders lose, and the brokers that I've worked with, that's very far away from the stats that I've seen. It's closer to 50-50 or maybe 60-40, but yeah, it's definitely not as high as everyone thinks. So again, we have a large pool of active traders that typically net themselves off against each other. So I think the B-book and A-book model is used by a lot of different brokers, and if they deny it, then again, I'm not sure why they would want to hide that, but it's a pretty common model for most brokers to run.
Yeah, and actually to come back on what you said about the 95% of losing traders, that is in fact not the reality. I think another very important point that not a lot of people look at is in those losing traders, you have all those coming into the market with absolutely no knowledge that just want to try it out with $100. Try it out, lose that $100. Okay, I don't like it, it's not for me, it's difficult, and just stops there. These people are taken into consideration into that percentage of losing traders, which then does not represent the reality.
Exactly right, and I see a lot of that as well. But I see a lot of those people come back and try again and be successful as well. So it's trading's not for everyone, of course. So sometimes that's the case. People come in, try $100 and don't like it and move on, and that's completely fine. But yeah, it's like you said, those stats are a little bit skewed, I believe.
Now, someone also asked about swaps. So are swaps part of a broker's commission? And if not, what is swaps? Basically, why do people have debits or credits on their accounts overnight?
Good question. So swaps in the simple sense are the difference of the interest rates of the two currencies that you're trading. Currently at the moment, the world's interest rates are so low across the board that you might actually have to pay whether you're long or short. But a few years ago, for example, when here in Australia our interest rates were so high, 4.2% or 4%, as opposed to the US. If you were trading Aussie versus the US, if you were to buy Aussie dollars, you would receive a decent positive amount. If you were to sell, you would have to pay. That's because the Australian dollars interest rates were much higher, and therefore the currency would yield a positive interest rate. So brokers tend to put small markups on those, and that's something that we do as well. So we do make a very small amount of money, but it's not something that we really focus revenue on, and obviously we're paying and receiving those swaps, so it tends to net each other off. But the amounts that we pay are usually directly from our liquidity providers, then with a small markup on there. So it's not a big revenue earner for brokers unless the swaps are massive that you see. But good idea when you're looking at swaps, you can check that in the trading platform by going to a currency pair, right click on the pair in the market watch and go to specifications. This is on MT4 or MT5, and it will tell you the long and it'll tell you the long and short value, and you can compare against other brokers and see if what you're getting is fair or it's in line with other brokers. Most brokers are pretty competitive when it comes to their swaps, but again, just do your research.
Now, someone asked if someone's position can actually have an impact on the market, on the price of the market. So he did not specify any lot size, any volume, but yeah, can someone's position actually have an impact on the market?
I don't really think so. There's so much traded, there's so much volume traded day to day. It's in the trillions. I think with the maximum lot sizes brokers have, I don't really think you could place a trade that was big enough to move the market, unless you did massive multiples of different 100 lots, 100 times 100 lots. Maybe you could move the market, but I've never seen that in my time, and I just don't think it would be possible.
So that would be mainly on smaller cap stocks and things like this?
Yeah, exactly. The institutional traders maybe with the sizes that they could do, but not any retail trader, I don't believe.
Now, some people also have been asking, what happens if you are in a trade, let's say, and you get stopped out, but you don't understand why you've been stopped out at this exact price? There's no obvious reason for that. What can a trader do? Can they actually ask their broker, or is it just that's a loss, it's part of the game?
Definitely 100% ask your broker. That is a very important question, and it's happened to me many times. So to give you an example, if someone comes to me and says, hey, Ben, what happened to this? I was stopped out, nowhere near my stop loss. And I might go back and say, oh yeah, it looks like the spread blew out to 40 pips. Let me check with the liquidity providers, make sure that price is valid. So I would go to our LPs, check with them. They might come back and say, yep, that was a valid price. That it was a news announcement. Spread got to 40 pips. This trade is valid. I would go back to the trader and say, look, this happens. But there's been multiple occasions where I would say, hey, I'll refund that trade for you just because I personally think it's unfair, and I think that was a very widespread. So it never ever hurts to go ask your broker about a trade. Just check and ask to get the price, ask to get the tick data is what it's called. So that will show you what the bid and ask was from the liquidity provider at that time. They'll be able to show you exactly what the spread got to, and you can do your own analysis and look, check with the broker, say, hey, even though this is a valid trade, I would like to ask for maybe a special goodwill help out here. So yeah, it all comes down to checking with your broker, asking the right questions.
Okay, yeah, makes total sense. And actually sometimes when it's not even a loss, but actually understanding why things happen. I say this because I remember 2 years ago being in a night out, and I had 3 trades running, I think. And I had 2 that I wanted to close, and I closed one by mistake on my actual phone. And I remember the next day looking at my phone and thinking, why did this trade get closed? And I remember sending a message to Blueberry Markets and getting the answer, you closed it from this device at this price for this reason, blah, blah, blah. And yeah, I actually have my reason, rather than just being in the dark and not knowing what actually happened with that trade.
Exactly. And look, that's the kind of thing where even if you said to me, if you know that had never happened before in the past and you really didn't mean to close it, I might just say, look, mate, I'll refund that trade for you as a goodwill. You know, it's just, I know what it's like to be a trader, and I know what it's like to make mistakes like that. So again, you can ask your broker. Hopefully that'll help out.
Now, someone also asked, are there actual traders working in brokerage firms? Are there actual people that trade? And then a question I'd like to ask as well is, as a broker, are you allowed to trade under your own name?
Yep, sure. So first question, there's lots of traders working for brokers. Lots of traders will run their trading desk. You know, they manage things like risk and the prices coming in from liquidity providers and so on. Am I allowed to trade? Well, I'm a trader myself. I don't know if I would want to work for a brokerage firm if I couldn't trade. I can't trade with Blueberry Markets, unfortunately, which is the broker that I would choose if I could. So I have to trade elsewhere. But yes, I'm allowed to trade in my personal name, and I have been for 10, 11 years. It's a hobby of mine and something that I love, so I would always want to be trading.
Now, when looking at institutions and hedge funds, which brokers do they personally use? How do they deal with brokers?
I've never dealt with a hedge fund personally myself. I think they would more so be dealing directly with the banks and the institutional side of things, because they're usually doing quite large volumes, and they would probably need certain parameters and certain margin requirements, and they would probably even have their own platforms where they would use an API to connect to the liquidity providers' pricing. So I would say they'd be going directly to the institutions.
Now, to finish the call, what would you have as a tip for any trader that is looking to begin as a trader? Any tips from a broker's side?
Yeah, I would say, again, going back to the points I've mentioned, I don't want to sound like a broken record, but first things first, when you're finding a broker, is check the reputation, check the regulation. For your own personal development, make sure that you're comfortable with your strategy before you're doing any live trading, whether that's on a demo or even on the very small live accounts, $50, $100 doing micro lots, something that's not going to hurt. Just to get a feel of what live trading is like, because it is very different to demo trading. Your psychology starts to come out, and I find even when I'm on live trading, I don't want to lose 10 cents, let alone my whole account. So I think it comes down to really putting in the work, really putting in the research, and just making sure that you're comfortable and understand your strategy when you're doing the live trading. And again, ask your broker questions as well. That's what they're there for. Get as much information from your broker as you can.
And actually on the trading side, so that's more on the broker side, but on the trading side, what would you give as an advice for anyone wanting to start trading, wanting to get their foot in the door? Yeah.
I think I would say try and work on your psychology side as much as possible. If you're getting, for me, I've made so many mistakes along the way that I wish I could go back and change. Just silly mistakes. Moving stop losses or getting greedy and putting the take profit further away, and then that trade goes and gets stopped out. So I think it's just make sure you learn from your mistakes. Really try and put in the work and try and put in the research and focus on your psychology. Just know that every single trade is a new trade. Doesn't matter how many losing trades you have, it's that next trade that's going to matter, and that you should be focusing on.
Okay, cool. Well, thank you so much for the call. Thank you so much for answering all the different questions in a very transparent way and sharing basically that other grey area so many people are questioning.
No worries at all. I really appreciate you doing this for me, and I love to see what you're doing out there. You have a genuine care for your clients, and you want to see people do well, and if you're a new trader, it's people like you who are really helping those traders get comfortable and learn the market. So hey, I thank you for what you're doing.
Cool, thank you so much as well. And I think it's quite early in Australia at the moment. What time is it?
Almost 9 a.m. on Monday morning, so big week ahead.
9 a.m. Okay, well it's close to 5
p.m. in Panama on Sunday, so close to 1 day difference. So yeah, have an excellent morning, mate, and speak to you very soon anyways.
Cheers, mate.
See you.
So I hope you enjoyed this video and you found it useful. If that was the case, please leave a thumbs up. Make sure you comment any question you may have. I will look at every single comment. You can also DM me directly on Instagram that just appears here. I post a video here on YouTube every single Sunday. I post videos about finance, investing, trading. So make sure to subscribe. As I said, it was Elliot. Have an excellent day. Peace.